All right, so mortgage rates have been on the rise, and it's leading to a reduction in the number of homes on the market and, of course, therefore, home sales. Right now, a 30-year fixed mortgage rate would come in at just over 6%. So that's more than double what it was just 3 years ago. Let's bring in Rachel Siegel. She's an economic policy reporter for the Washington Post. So we've been talking a lot about this. We've been watching the interest rates go up. There's been a long-term problem with just the number of houses that are available, right? The inventory has been low for years now. What's the impact on the greater economy if people are not listing their homes?
Well, thank you so much for having me. The housing market really is representative of the economy as a whole. It's one of the ways in which every single person interacts with the economy in some way, whether they're renting, whether they're trying to buy, whether they're owning. And in this case, it's really clear that people who do have homes, who are currently homeowners, are contributing to this other problem with the housing market right now. They're making it so that you don't want to give up your house if you have a low mortgage rate. If you're looking at a current mortgage rate of 3%, even 4%, you're looking at the rest of the market and saying, if I was going to leave this house, I would be looking at a rate of maybe 6%, close to 7%. And that furthers this dynamic of just not having that many houses available. There aren't that many houses being listed or entering the market, which is just keeping this situation a little bit more stuck than normal.
Right. And normally what happens when you have interest rates going up is you have the price of homes going down. But if the inventory is tight, then you're not going to see that happen.
That's exactly right. If you still have this persistent, sticky problem of supply not matching up with demand, prices are just not going to come down as much as they would need to get inflation under control. And this really gets to the rub with the tools that the federal government has to try and cool down the economy. We've got the Federal Reserve raising interest rates to make it so that borrowing costs are high, that mortgage rates are high enough where buyers bow out of the market, where they say, okay, I'm going to wait here and maybe give a chance for supply to catch up with demand. Then you have people who would be looking to put their homes on the market also being sort of shied away from taking on a higher mortgage rate if they were to go elsewhere.
So what options are there for new home buyers?
New home buyers, unfortunately, are still in a difficult position. I will still talk to people who are trying to get into the market who say that they lose out on 5, 6, 7 offers, or they're told that in order to get to the front of the line, they have to put down, much, much more money in cash up front just in order to get that house that they've been looking for. The hope is that, eventually that things will continue moving in the right direction, that homes will stay on the market a little bit longer, that more homes will become available, especially if interest rates eventually simmer down. But unfortunately, it's just remarkable that even with borrowing costs as high as they are, there just are not that many homes available to make it easier for aspiring buyers.
So then if you're ready to make the leap, should you maybe hold off in 2023 and wait till 2024?
It's so hard to know given that there's no sense of certainty with any of this. But I think that the advice that I've certainly heard from people who are looking to sell is just to make sure that you know where you're going, to make sure that you are in a position to go somewhere else, to know what it would be like to calculate a higher mortgage rate if you could take that on, to consider renting, but know that there's a rental that you can afford. If you're going to give up the house that you're currently sitting in, having a plan for that next step would be really crucial.
And then the other factor is that rents are pretty high too. So I imagine, that's obviously adding to inflation. And I imagine it's difficult to sort of cobble together enough money for a down payment when you're paying sky high rent.
Well, it sounds familiar to me sitting in my rental right now. But that's absolutely right. And overall inflation is driven enormously by rent. Rent is one of the things that has to come down in order to get inflation throughout the economy to simmer down to more normal levels. Yeah. There's a thinking that if home prices can get under control, that will eventually trickle down to rent, and that can eventually help cool down the housing market as a whole. But that timeline keeps getting pushed back. We see some movement on new leases, but it's really going to take a little bit more time to be able to say whether the housing market is cooling the way that officials want it to.
Right.
All right, Rachel Siegel, thank you very much. Appreciate it.
Thank you.